Okay, so let's start on the weekly time frame. Weekly and monthly look very similar on this. So just for the sake of time, let's just keep it on. We'll work from like weekly and daily and how we're getting our directional bias. So let's start from the top, start working it in, and then I will show you where we started looking for opportunity. Let's move this down. Okay, so initially Odd Cat was making a pretty significant run, which started way down here, first quarter of 2020. And we've been kind of just running. And once we started getting up into this point, we saw price start breaking down. We can see we had some short-term highs here. Price made a run up on those highs, and then a weekly bearish engulfing candle, and then it just really started breaking down. Once I saw it starting to break structure and really just start showing bearish impulsive price action, I was initially looking to see what would happen at this point here, right? If this was just going to be a run on liquidity here, and then a push up and maybe try to go higher. And when it came to that area and it almost made, relative equal lows or maybe a double bottom, and it almost started pushing up here, I had the inclination that was just going to start coming deeper and make another run onto this low here. And then I wanted to see the same thing. I wanted to see how price reacted after it took out these lows. Typically when you trade into areas of liquidity, you're going to see one or two things. Well, it can be a couple things. You can either see price just trade right through it because it has an objective further. You can see, another buildup of liquidity in those areas and for it to jam in those highs and lows and then run in the opposite direction. Or you might see something like this where this one didn't, but let's say it jammed below and took this low and then started reacting from it quickly. That's typically what you're going to see. So this low here, price just jammed right through it and just kept working. And then when we got to this area, it basically did the same thing. It ended up making relative equal lows, then making equal lows. And at this level here, this is where we got a pattern that really made me feel comfortable about looking for shorts. Can anybody see it on a weekly time frame? Why this pattern here really made me start looking for shorts. Let's do this. Forget that. Just that right there. Yeah, it was a signature pattern, right? So that's like patterns that we talk about, the normal patterns. I like to see that stuff on higher time frames. And then I can build up my directional bias with that, and then I can work in, lower time frame entry. So when I saw this here, you can see this is kind of one of those things I was talking about. When it got down to a significant level here and made equal lows, and all this price action here, all this was doing was just building liquidity, right? We had, all these highs up here, and then we had obviously the equal lows here, but ultimately price was just ranging and moving sideways. Now, this is where you want to pay attention, and it would make sense given that we have no real break of structure. We have significant lows here and further down, that it would make more sense to come lower, right? Obviously if we saw something like this and then an aggressive move up here, that's a different story. But to be in alignment with all this, seeing something like this and then down, you're going to get a higher time frame daily, weekly signature pattern. And this is just building lots of opinions here. So what we had happen here was price, when we got to this level, where is the replay button? There we go. We saw price push up here and then aggressively push down, attacking the lows. And we had a daily signature pattern here. So let's run this out a little bit. Okay. So when you see something like this, okay, we know a couple of things here. One, we know that we have been in a bearish environment for quite some time now. We're creating, bearish structure on higher time frames. Since this run on these highs here back in February, we've been bearish for a good portion of the year, right? We're coming into October. So, you're talking 8 months of bearish price action. And then you get this pattern here. This pattern here, right? Now we know that this is manipulation. We had a run on all of these highs in this area, and then look at the price action afterwards. An aggressive push to the downside, a little bit of consolidation here, and then it pushed down and kind of made like a double bottom. Kind of gave you, a harmonic pattern here, almost. It looks kind of sloppy, but so we would look for price to come back up into this area, right? So what I initially did was drop down to like the 2 hour. I think that was the initial candle. And the main reason why I was doing that, right? One, we can see the double bottom down here. So like just off the rip here, right? Just based off of what we saw on the weekly, daily time frame, right? Look, we know weekly is bearish. Okay. It's been bearish for, since somewhere in February. And then we get this pattern. So when you get this pattern based off of the weekly time frame, just what we're seeing here, weekly, daily time frame, you're looking to work in entries up here, right? Off of this kill zone. Let me draw that on here. Okay, you're looking for entries here, whether it's working in off of this candle, right? Or patterns in this structure here. And then you're targeting down here. And that's like, weeks and weeks and weeks of price action. Keep in mind that this is higher time frame. So let's go back down to a daily time frame. And if I'm losing you or if something's not making sense, please stop me, ask questions, and we can dig into it. Okay, so just seeing something like this, okay, and you can keep just for reference, right? From this swing down to this swing, right? This was back in July, and then down here, this was in August, and then up here, this was in September. So you can see that, let me throw this on here, right? So 1, 2, 3, 4, 5, 6, 7, coming into 8 weeks of price action from the time of this manipulation to the time of this low, and then the pullback into this manipulation candle. So this pullback here was about 2 weeks. This move down here was about 5 or so weeks. And then we're coming into the 3rd week here of that pullback, coming into that candle. So, that right there, you got to assume just with that information that, we're looking at multiple weeks for price to come down here, right? So when you see a pattern like this on a higher time frame, there's your directional bias based off higher time frame, right? And we haven't looked at anything specific. We're not looking at imbalance here. We're not looking, we didn't need even to throw our fibs on this, right? We're basically just looking at the story being told here. And this pattern right here, just in alignment with the structure, that just gave us so much information and weeks and weeks and weeks of potential trade setups. Does that make sense for everybody? So, I mean, and that's just to this low, right? And this is where you would want to do a couple things, right? We're obviously looking at that initial low down here, but then you're looking at potentially, right? If we're going to get a continuation swing on higher time frame, we're potentially looking for price to come into these extension levels, and then we would be targeting other significant lows over here. Right. So, I mean, you're talking about a move that, just not down to the bottom, but definitely further, right? This would just be the big target here. So, we're looking at quite a bit of price action that could be leading up down into this area, giving you a directional bias until, it starts its next wave, it starts its next correction, right? So the first thing, just looking here, the most basic thing that you can do here, if you saw this pattern and you wanted to work in an entry off of this, all we want to do is look at this candle here. And this is a daily here, and the daily showing quite a bit of wick. I'll drag that over. So all we do from here is drop down until we can see a 2-candle pattern, preferably a bullish engulfing, or excuse me, a bullish candle followed by a bearish engulfing candle. Basically, this pattern here with these 2 candles minus the wick. That's ideally what we'd want to see. So let's flick through them. 8-hour, we don't see that here. 4-hour. Yeah, let's do this. I'm going to go in replay mode just so I don't have to keep sliding over. Okay, 4-hour, we don't see that either. We just see a lot of wick. Let's go down to 3-hour. I know a lot of you don't use the 3-hour. I barely do too. I don't know why I even have it on here. But still nothing here. A lot of wick. 2-hour. 2-hour looks better, right? We can see strong up candle, followed by strong down candle, bearish engulfing candle with a lot less wick. Let's go to the 1-hour. 1-hour, we have that 2-candle pattern, but a lot of wick. So maybe we could go deeper into this wick. Let's go down to 15, see if what's, yeah, so we're really not getting too much in here, and I don't want to go too low here, right? It's really not that important. Remember, because, you know, ideally, like, these are going to be big stops, and ideally what all we're really doing here is using this for a directional bias, right? So like, let's just say hypothetically, you were, let's do this here. Let's just say you see this price action here, and I'll mark up the 2-hour. That's our 2-hour manipulation candle. I will make this red. Call it 2-hour. Okay. So let's say, you know, because this was the situation with EU. EU had broken structure. It had some targets, and there was a point of interest that we were looking for it to continue down. So like, let's say you were buying here. And again, this would be against the grain. This wouldn't be in alignment with the higher time frame objectives here. But let's just say, you know, you wanted to, you know, you saw a really good buying opportunity. Maybe you saw this level. Maybe you saw price also running on this high here. Right, and you had a couple of targets, and you had a couple buying opportunities, and you felt confident enough to execute it. When you see something like that, right, and you're against the higher time frame, that's like ideally what I wouldn't recommend doing until you really have consistency. It's so much more relaxing and peaceful and easier as a trader if you can just really find certain patterns on higher time frames, and then waiting for price to come into these points of interest, like higher time frame kill zones with higher time frame manipulation candles like this, and then either one, work in entries off of this, and or look for patterns in there. And then keep in mind, right, given that this is higher time frame, we don't even need this to come to that candle, right? We're just looking for price to push back somewhere in that point of interest and then start breaking down. And then when it breaks down, right, we have our higher time frame target here. We know that that's most likely going to take 2, 3, maybe 4 months, maybe before it gets much, much lower down to this low here. It could be 2, 3, 4 weeks. We just don't know. Right? This whole pattern from manipulation down here, down up to the top, that's going on 8 weeks, right? So, you know, it's not like you have to catch the top, right? You can use these higher time frames mainly as points of interest. But if you were buying here, and again, I wouldn't really, I recommend against it. For most people aren't ready. Most people do it because they don't have the patience to wait for, you know, you saw something like this, the true alignment for something like this after this price action until price got back up in that point of interest after making it was 7 to 8 weeks. Most people, if OddCAD is one of your pairs, are not going to wait 7, 8 weeks until price is there. And that's the big issue. That's the big issue with a lot of people. They can't wait. They have to get into a trade. And that's why you have a watch list. So there's other pairs that's why I also say non-correlating pairs. So if you have something like this, you just set alerts when price comes up into that kill zone, and then you switch gears with it. But until then, it's literally just wait for price to get into that point of interest. When price gets into that point of interest, then you're talking about, again, you don't have to worry about getting the best entry on this manipulation candle. You don't have to hammer down and get the highest one into this wick, right? That's just foolishness, right? And most people are gonna, do it incorrectly, or they're gonna look too high, focusing primarily on risk to reward, and trying to get these tight entries for positions they can't even hold to the bottom. Most people are not holding trades for 3, 4 weeks or longer, which could be the case after price gets them into this area here. So from an intraday perspective, and the way that I trade stuff like this, today had a really good opportunity on OddCAD. Initially, what we were doing was we did initially, since we did have a 2-hour candle off of this, I think initially we were looking on this, and I think we either took the 2-hour candle straight up, or we were looking at the 50%. And then you might recall when I was talking about this, it was solely because my trading partner, OddCAD, is one of his go-tos. It's the only reason why I knew about this. And I follow some of his pairs. So I think we either took the bottom of this, or we chopped it up and we took like the 50% of this candle, right? And then that was one of the points of interest that we were looking at for shorting. And that would have been solely our long-term hold, and we would have been riding it down to the bottom. But the way that I usually do stuff like this, right, and the way that I did it on EU, and the way that I did it after price came up into this point of interest, right? Let me just show you here, right? Let me flick this on, and let me just go to a higher time frame really quickly. So the time price got up here to its current price action, you can see it's 1, 2, 3, and we're going on 4 weeks, right? So you can see here, after this run up here and a retest, we will look into it, right? You had bearish price action all last week, right? A lot of intraday setups here that you could have held in alignment with this. Same thing here, right? We're still creating that bearish structure in alignment with the continuation move, targeting major lows, right? So you don't necessarily have to get the top, and you can see it came right up into that 2-hour candle. That was most of that week, right? Price was kind of consolidating. It made some equal highs here. Price jammed up and pushed into that candle, strong push away, and then really didn't give too many entries off of this candle. That would have been the first candle I would have looked at here. And that's typically how I trade these higher time frame points of interest. In most cases, right? So most cases, let's say we identify that higher time frame manipulation candle, and we're looking at the higher time frame low. That is our point A to our point B, and then everything in between is looking for short-term setups that are in alignment with that. Shorts only. So what I would typically do is, that's kind of where that phrase comes from: signature patterns in a logical area, or patterns in logical areas. Right, this here would have been a logical area, and the reason for that is, one, we're in the kill zone, right? 71 to our 886, that is our kill zone, and you can see that 2-hour candle that falls right in between the 786 and the 886. That was our turning point. But you can see we also did get a pattern here, right? You can see these relative equal highs. Price spiked up, took those equals, then broke down. that's probably the next point of interest that I would look for here. This example here, prices didn't get there, and that's fine. Let's just make that red. Correct me if I'm wrong. Kyle sets alerts each day and don't even look until the alerts hit. I'm pretty sure that's how he does it. Kyle's been with me for quite some time, and that's the best way to do it, especially if you're somebody like him who, he's got his, bunch of kids, another kid on the way, working, just a lot going on. Higher time frames suit him best, and he'll find higher time frame points of interest like this, and set alerts. And then once price gets there, then it's time to go to work, right? So, looking at, and this is where, when we talk about like previous week highs and previous week lows, when you're in alignment, right, from a standpoint of a directional bias, from a higher time frame pattern like this, what do you think the big target is every week on a higher time frame, daily, weekly, monthly continuation move? What do you think the big target is there? Once you come into a point of interest like this 2-hour candle up here, right, from this daily candle here, right, from this daily candle here, what do you think the big target is every single week while you're working down to this low down here? From a weekly perspective, previous week low. Then you can have intraday perspective, it'd be the previous day low in this situation. So I see some people saying it, previous week low high, previous day low high, right? So, from an intraday standpoint, right? Like look at this week now, right? Look at this week here. Well, we can even take it from way up here when this previous, I'll show you. Let's just do it like this, right? Here is the previous week low. We had this previous week low here, which, this was still when it was kind of making that signature and turning, but either way, previous week low, that was attacked. And then we had a new previous week low established, price pulled back. Then once we had this pullback, from a daily and weekly perspective, right, we would be looking and targeting the previous week low with this big low as the main objective. But from an intraday standpoint, we would be targeting previous day low, previous day low, previous day low, previous day low, price push below that low, new low established, previous day low, attack with this price action. Here was the next low, this price action here, previous day low, this one here. Where do you think today's price action is going to end up, folks? Here's previous day low right here. Not quite there yet, but where do you think it's coming? It's coming for that previous day low. Now switch your eyes to the top. Switch your eyes to the top. Previous day high. 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 Trying to get it on there. What do you know about all these previous day highs? In this continuation move from the weekly, daily continuation move. Yeah, they're all being respected. And that's why you want to find these directional bias, and you can use these previous day highs, especially when the next day comes in. Getting an entry close to that previous day high and using that area for entries is you're going to get the best value, and then you're targeting that previous day low, right? We took that previous week low here pretty quickly, but now that we're getting down to the nitty gritty and we're getting low, this is the low, right? We're in Thursday right now. Odd cat's kind of a slower pair. Will this come down to this low this week? Perhaps. We don't know that, right? But that's the main target. Right? That's the main target. These candles are not reversal candles. Why would this candle be supported? Right? Like that's the target here, right? In alignment with the higher time frame. So my point here is when you're getting these higher time frame directional bias, let me flick this off. We can take all of this off here. Let's take this off here. Being respected, respected, respected. Right? So like I'll actually keep the weeks on there, right? So when price hit the 2 hour, we got the little bit of move. Then the following week, bearish price action, right? Slight reversal towards the end of the week, which can typically happen Thursday, Friday. And then we come into the next week and then we're continuing with that move. It was just establishing swing points, right? Daily, it was just creating daily structure here. Then we got that continuation move, and then we're still getting that move, right? So 1, 2, 3, we're in that 4 weeks of price action for a directional bias, perhaps coming further down, which would probably be another couple weeks. So you can see there, finding those points of interest here on odd CAD, you would have a directional bias here with multiple intraday opportunities, right? Without ever focusing on this candle here, right? Like you can enter off of this for sure, but you know, whether it hits it or not, if this candle looks ugly, or if you can't find something that looks like a solid candle pattern, it's really not important. Like if this hit this 2 hour or not, we're basically just looking for price to pull back up into this point of interest. And then that point of interest is the turning point where we would start looking for intraday price action to start going to the downside, ultimately targeting this long-term low. Like that's our point A or our point B, perhaps further. And then everything we're looking for from a short-term directional bias standpoint, from a weekly standpoint to a daily standpoint, it's all shorts. It's all short, especially after you see this push down, slight pullback, then that continuation. And then all you're doing is dropping down to 4 hour, 1 hour, etc. in these moves here, in these weeks, and looking for the same patterns, right? So let me show you what today's look like, right? So we've only been really looking at daily and higher time frames, right? So let's go to the 4 hour, just to give you some perspective, right? I'm sure a lot of you can see it right here. Let's do this. Okay, can everybody see this pattern here? Is that clear for everybody? So like, you got your equal lows here. You got your FU candle here, your manipulation candle here, a run on relative equal highs here. You have your weekly directional bias, right? We had our weekly and open somewhere in this point here. We saw a weekly high established early in the week, and then we started breaking down, moving lower than the weekly open, creating bearish structure here, then a continuation move, right? That right there is providing weekly directional bias, weekly structure in alignment with the higher time frame pattern, continuation move, and ultimately this target down here, this big time low. So right here, looking at this, when you see a pattern like this with this bearish structure, all originating from that 2 hour, that daily 2 hour manipulation candle at the top, all of the bearish price action in alignment with the higher time frame bearish price action, then you see something like this where we're making a run on previous week lows. We're making a run on previous day lows, respecting previous day high. Here's previous day high here. Here's previous day low here. Manipulation candle, equal lows, short-term target with the long-term target here. You'd be looking for shorts in this area here. Does that make sense for everybody? And then you get a candle like this, right? We can see the kill zone here, our 71 to our 886. We do the same thing. We're looking for this candle pattern here, and we're going to drop down, right? Because we have a lot of wick right here. Now, granted, on odd CAD, that's probably not too big, right? So let's just say, so we can do a couple things here, right? So first off, here's our candle. This is what I would typically recommend for people, just like if you're trying to find consistency with your trading. Just do that. It's not about digging deeper. It's not about, it's not about winning. It's not about losing. It's about just testing your directional bias. You're testing if price is going to come to this point of interest and then attack this low and then ultimately come down here, right? You don't need to be worrying about doing this so I can jack up my risk to reward, right? Because why would you be doing that? You're only doing that to potentially increase the amount of money that you shouldn't be making on this trade. It's more important that, one, you get the directional bias down, right, from a higher time frame standpoint, to find lower time frame, 1 hour, 4 hour setups that are in alignment with the higher time frame. And typically the patterns are just going to be the same thing. This pattern here is basically the same thing we're looking at a daily, right? Manipulation candle, strong expansion down, creating more targets, right? Looking for a flag pullback back up into this area here. We can see it also created a retail, break retest level here. Price pushed up, attack these short-term highs. We look for price to pull up into this kill zone here and then come down. Like, if you're trying to get consistency with your trading, it's really not important to, it's not about the risk to reward. Like, whatever risk to reward this came out to, like whether you took the 71 down here and you're getting 4-1, that's awesome. You're testing your directional bias. You're testing your patterns. You're testing your entries to see if these are solid entry areas, manipulation candles that are actually being tested before the continuation moves, in alignment with all the impulsive price action. All the impulsive price action here, bearish, bearish, bearish. All the corrective price action here, bullish. Bullish flags all day long. Impulsive, 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 looking for another impulsive move. That's all you're testing. And then you're testing your targets. You're testing, okay, here is my short-term target. Here's my long-term target based on higher time frame. They're in alignment. That's a bearish move that would run through these, make a run on those lows. So you're testing this. If price is going to come into your kill zone and then come down to where you think it's going to go, that's all you're testing. Then once you start getting that directional bias down and you really have a good idea of what price is doing, where it's going, in alignment with the higher time frame, then you can start doing stuff like this. You can say, okay, I'm going to start working in a tighter entry to jack up my potential reward. The first thing that I would do, if that, and this is the process that I did, the first thing that I do, I work on fibs, right? The easiest thing that you can do to increase your risk to reward on higher time frames is simply pick a higher Fibonacci level without ever going lower. So let's say this was the 4-hour candle, right? Let's just take entry on the 886. Simple. And you can look for an imbalance in this area, up in this area, inside this candle, just to see if there are reasons for price coming higher in there. You're just getting a bigger discount, right? That is the easiest way to do it. Like, let's say, you had, the 4-hour candle started there. It's the wick, but let's say the body was there, right? And your entry was on the 71, right? Instead of digging into 50% of candles, instead of dropping down lower time frames, instead of looking for double mitigation, just bring that up. Take the 786 or the 886, right? That's the best way. So you're going to go from a 4.3 to a 6-1 on the 7.8 and an 11 plus on the 886, right? So that's the simplest way of doing it without ever having to go lower. And you don't ever have to go lower. You can find setups like this on 4-hour and 1-hour time frames or something in between, in alignment with the higher time frame, right? So that's the first thing that you can do. Second thing that you can do is, you can take, if this was I don't like chopping up candles like this that have a lot of wick on top, but let's say this candle here looked like this one. The next thing that you could do was just, you could chop these candles in half. Instead of taking the open on those candles, take it on the 50%, right? It's probably most likely going to fall somewhere in that kill zone, right? So it's very similar than just taking an entry on a different kill zone, right? You can probably eye it, right? Like if I was going to take this candle here and let's say the fibs were on that, I could just say, okay, that's about the 50%. It's also the 886. Boom, there it is. Right? Without ever, we're still not off the 4-hour time frame. The next thing that you can do is what we did on the other candle. We can drop down time frames until we find this 2-candle pattern, strong up candle followed by strong bearish candle minus the wick, right? So let's drop down to a 2-hour. 2 hours not helpful. That's not helpful. That's wick. That actually makes it probably a little bit worse. So let's drop down to the 1 hour. 1 hour, that's no help to us too. That just split that big wick in half. Now we get 2 wicks. Let's go down to the 30-minute. Winner, winner. Now we can see a full-bodied candle followed by bearish engulfing candle, then the move. So let's take this here. And let's go back to the 4-hour. Okay, so that is the 30-minute, or 30-minute candle. That is the 4-hour candle here. And then let's do the easiest option, which was just taking the 886 straight up. 886 straight up, boom. That's the easiest. All using same targets, right? All using same stop loss, all using different entries. 4-hour straight up, okay? And I'm going to show you usually the easiest option without ever going to lower time frames is usually the one that pays you the best, and usually the one you don't miss. It's funny how that works sometimes, right? So that's the 886. This is the 30-minute. So 886, 4-hour off of the open, and the 30-minute. So the 30-minute is 9.5. The 4-hour is 5. And right off the 886, just taking the highest fib level of the kill zone, that's offering 11.66. Okay. Now let's run the price action. So we're kind of talking about a couple different things here, right? We're talking about directional bias, and we talked a lot about that. And then an intraday perspective in alignment with the higher time frame, and what we'd be targeting on a daily and weekly perspective in alignment with the higher time frame, the big low, right? Off of the manipulation candle, that big swing, the continuation move. So we're not even at that low yet. So now we're talking about how we can capitalize off of entries, off of beautiful flag. This is my favorite pattern here, right? Trending market, higher time frame continuation move, higher time frame targets, right? Like if this is all you waited for, think about what your results would be if this is all you waited for and just did this and never went lower than a 4-hour, only to just maybe get deeper into this candle here. Think of what your results would be. Like people give me shit because my Facebook group is Forex Trading Made Easy, because it has easy in the title. Like, I'm not saying trading's easy. I'm saying it can be made easy if you just follow simple steps and just do something like this, right? Like that 30-minute, that can be more complicated for people. Taking the 50% of a 4-hour candle, that can be more complicated because, all the candles are going to look different, right? Like the easiest thing here, something made easy and offering the best risk to reward, just take the 886. Right? Things can be made easier. Just taking patterns like this, just taking signature patterns with flag patterns with higher time frame alignment. That's something that is made easy. That's taking an easy strategy or an effective strategy and making it easier. But most people can't wait for this. And remember, we're getting 9.5 with an 87 pip target. We're getting over 11 and a half with an 86 pip target. All of these off of 4-hour candles. This one's just deeper in the 4-hour off of the 30-minute, 9.2. The 4-hour covering the wick, covering the whole thing, 16.2. And then the 4-hour taking the 886, 7.6. So you're talking about reasonably small stop losses, all three of them off of 4-hour time frame. Getting really good risk reward. And let's play this out. Let's see which one of these. I'll switch it because this is probably, actually, you know, I don't even need to do that. But let's run it. Let's run the price action now. Let's see which one plays. Okay, so we can see there. 4-hour obviously played. 30-minute obviously played, and we can see the 886 also played. That was the easiest one here. That was the easiest one to improve the risk to reward without ever digging into a candle, without ever flipping time frames, right? Just taking a higher Fibonacci level in the kill zone. How many people do that? How many people do that? How many people dig into the candles versus just taking a different fib level? And granted, like, you know, we can go into this area here and look for imbalance within this candle, right? And look for areas that would suggest which fib to use. Like we can take it a step further. But like this is trading made easier, just doing something like that. The easiest option here. Well, I mean, picking the 4-hour bottom there, I mean, that's pretty straightforward. That's the initial option. But like, do you see how like there can be little things done that make it a lot easier? Isn't taking that 886 a lot easier than digging into this candle or going lower or looking for a double mitigation, right? And that trade right now, right? Strong reaction. We're most likely going to see it make a run here because it's this high here is the previous day high. All the previous day highs have been respected for the last 2 weeks. All the previous day lows have been run on. This candle, this price action from this pattern, you know, I don't like to guarantee things, but I'm pretty dang positive that we're going to see this end below this, whether some point today or at some point this week. And then maybe it might be this week, maybe it might be next week, but we're most likely going to see a run on this low very, very soon. But just for some perspective here, where price saw its low off of the 30-minute, we saw just over 11%. Off of the 4-hour candle, we saw just over 5, maybe closer to 6. And from just taking the 886 straight up, we saw 14%. Just, you know, we'll just call that's 6.97. So we'll just call that 7 to 1, 14%. But that's where people get jammed up trying to like go lower. They find these higher time frame setups and they just feel like, man, I got to get these tight entries. Like you shouldn't be doing any of this stuff, right? If you're stage 1, stage 2, you shouldn't be doing any of this. Like it shouldn't be the focus. The only focus of doing any of this stuff is to increase the reward. You can't be increasing the reward on your setups because that's scaling. If you're not profitable, how can you be focusing on scaling up and making more money on these trade setups? Directional bias first. Get your setups down. Get your entry points down. Get your targets down. Short-term targets in terms of intraday perspective, and then in alignment with the longer-term targets. Get that stuff down. See if price is going to come to point A, point B, point C, and then do that consistently. You see those charts that I posted, AU, USD JPY, and EU in the mentor chart section? That's directional bias, right? All of those, I think every single one of those was probably just about a month in advance from when the time that they were talked about or marked up and sent into this community before they actually, got to where we thought they were going. And there's a lot of price action in between it, a lot of other opportunities. right? That's what you got to be testing. Finding setups on those higher time frames, and look, like take that UJ for a point, for example, or even the EU, right? Like the EU, get really good at doing this. Get really good at doing this. When we saw this EU, let's flick this. And I'm not trying to toot my own horn here. I'm just showing you what you need to be focusing on. We had it drawn like this. Like we had this pattern just kind of sitting here, chilling, anticipating it running up here, right? And there were buying opportunities in here, but we're okay with buying in here because we're targeting this and then knowing that we need to phase out when we get in this kill zone, because that's where we would then be in alignment with the higher time frame and be targeting down here, if not lower, other major lows over here. So that's our directional bias. When we looked at that, that's our directional bias from point A to point B to somewhere down here, point C. Let's just see how many weeks we're looking at and where price is now. So that's, we had this week, that here when we marked it up. So half of that week, we won't even count it. So that's 1 week, 2, 3, 4, 5 weeks of directional bias from when we marked that up. That's what you need to focus on. And then when you have stuff like this, then all of your intraday stuff, like, you know, we had the buying in here off of that 1 hour. And then we had selling opportunities in here, selling opportunities in here. I caught a, we shared that the 15-minute setup in the Discord earlier in the week. I think it was Tuesday. This one here, right? We're looking at equal lows and then this major low. That's very similar to what we just did on that odd cat, right? Higher time frame, swing point down here, right? Big double bottom, big overall target in alignment with the structure, in alignment with where's all the impulsive moves? Impulsive, corrective, impulsive, corrective, impulsive, corrective, impulsive. Get this daily intraday directional bias in alignment with the higher time frames. That's all you got to do. And then be able to pinpoint these directional bias. Like that's what you need to do right there. You do that. And then all you need to do is wait for patterns like we just went over in OddCAD. Wait for patterns like this one here that we shared. I don't want to delete my whole markup here. Right, this was kind of choppy in here, but it was just a flag here. But that was the play off of this one, right? Right, nice manipulation candle, nice equal lows, impulsive move, flag, continuation. Right, that's all you want to do. That's all you want to do, right? And it's as simple as this, right? When we had that 8-hour point of interest on this EU. Now I got all these scribbles here, and I'm afraid to clear the chart because I got this markup on here. I've had this higher time frame markup on here for a couple months now, so I don't want to mess with it. I know it's not much, but right. So we were looking at, I believe there was like an 8-hour candle in this here. Let me just fix this highlighter. Right, so we were looking at this area here, right? Now, granted, this came up really, really high here, and then, you know, it never broke this high. It still respected this. But all we're doing from this point of view, right, is somewhere in this kill zone is looking for price to turn and break structure, which we did. Right? Once that happens, all you're literally doing from point A to point B, this low here, this double bottom, right? All we're doing from this point to this point is looking for patterns, looking for signature patterns, looking for higher time frame manipulation candles, right? The biggest one and the most obvious one right here. Right here. Same thing that we just saw on OddCAD, right? Manipulation candle, lower low, price pulled back up into this candle and then ran. right? And then there were other ones, right? I think there was a few others that just didn't play. This one had my eye. I was watching this one here. Price ended up playing this whole point, this whole order block here. Right, we can see this whole point here that price did actually come up and touch it here for FOMC, I believe it was. Right, but that's all you're doing is looking for patterns that are in alignment with that. That's it. Right, we had another manipulation candle here. If you guys recall this one, this is the one that I was talking about live last week when I started the FTMO challenge. This was an entry here, right? We had a manipulation candle run on these highs, strong push down, created these equal lows here, price pulled back, right? That's a new entry. There was like a 5-minute candle in here, right? But you could have just taken the 30-minute, right? It was a 30-minute flag. Here's the next one. That's the next one right here. Boom, boom. And then it just worked itself down. Flag, impulsive move. And then we saw another one here, right? You had this one here. Price came short. Then you have this one here, which we talked about in the group, right? That's all it is finding your big higher time frame point A to point B, and then find manipulation candles on the way down. That's all you're doing. That's how you can make trading easier. That's it. Both of these are the exact same. OddCAD, this, right? And that's how you can make it so much easier. That's why the directional bias is so much easier. And then, if you found your point A on EU, for example, like where we're anticipating price to turn, like up here, right? And I'm not talking about this in hindsight, right? This is stuff that we reviewed a month before. But let's say we were looking at that point of interest up here, and that's where we wanted to see it break down. You literally just wait and sit on your hands until you do see something like this. And if you don't see something like this, you just don't take the trade, right? Like you might see something like that 3-hour here, right? And price might look like it's coming back up and it comes short, right? That's fine, but don't force anything. All you got to do is wait for patterns like this. Corrections like this, building liquidity, clear manipulation candles, followed by lower lows. Then same thing that OddCAD did, right? And then you can do the same exact thing, right? Like, look, once you get to it, right? If we were going to take this candle here really quickly and we'll call it on this, let's just say you wanted without ever going lower, right? Here's our 4-hour open here. So you have your 4-hour open here. Boom. Right? We'll just target the low because that's the higher time frame point. Well, we don't even need to. We'll just target this low here. We'll just target the first fib extension level, just for example's sake. Right? So then the next thing you can do, right? You can take the 50% of that 4-hour candle. That's a pretty solid full body candle. Like that's probably one that you can take the 50% off if you want to do something like that. So we can take that there. And then the easiest one, taking 886 here, right? And then the other option too would just be dropping down like we did for that 30 minutes. So in this example here, we're on a 4-hour. Let's drop down to a 1-hour. We're looking for that 2-candle pattern. And this one, you're lucky because we got lucky because we have it here. 1-hour candle, engulfing candle, the move. So we have a 1-hour candle here. That's also one that you could use. This 1-hour candle also aligns with the 886. So same thing. But you could have got that entry without ever even going to the 1-hour just by getting that candle. And then again, all we're really doing there to like help you determine that is just look to see if there's imbalance in that. And we're on a 15-minute time frame, but we can see that there is imbalance here, right? So that would be reasons for this to come higher and not play that 4-hour open there. But just for example's sake, just kind of showing you how simple it can be with these 4-hour time frames without ever going lower. You could take the 50%, that brings this 3.3 to 1 to 6.7, and you could take that 886, which was also the 1-hour, and then you're going to drive it up to 9 to 1. And you can see it came all the way up to fill that imbalance, coming to that 886 before coming down. without ever going to the lower time frame, without ever going out the 4-hour time frame. It's just, you don't need to be focusing on that until you can accurately get your directional bias and have a good idea of where price is going to go a month before it happens. And then when you find those points of interest, like we did on the OddCAD 2-hour manipulation candle, like we did on this 8-hour or 4-hour manipulation candle here, right? Once you find those points of interest, then you're looking for those continuation moves, and then those patterns within those moves, the same patterns within those continuation moves, targeting the lows. And that's how you can get into really good swing trade opportunities. That's how you can get into, swing trade opportunities mixed with intraday directional, targeting previous day low, get those short-term targets by letting your higher time frame swing run. Really good opportunities for twin trading. There's just, once you get the directional bias down and your short-term directional bias in alignment with the higher time frame, the amount of ways that you can capitalize on these moves, it's insane. Like, just picking out the EU, for example, I mean, we knew on this 1-hour candle, do you guys remember that 1-hour trade? That 1-hour candle there, up to that point of interest, that was a week, 2 weeks there, and then down there, we knew where we were buying, where we were looking for the turn, and then price to come down and target this low. That's, a month and a half, 2 months worth of, look, 1, 2, 3, 4, 5, 6, going on 6 weeks of an accurate directional bias, knowing what to look for on every single week, right? When we got to that point of interest up here and it started turning, you have 1, 2, 3, 4. You got a full month of looking for shorts on EU. That's why every single thing that you saw me post on EU for the last month has been shorts. Literally. So we're quarter past. I didn't even realize how long we're going here. Do you recommend holding the trade for that long? So again, what do you guys think my answer to that is? Locating our patterns on higher time frame has to stay our focus because they can pay back for weeks on end. So really it comes down to what stage you're in, right? If you're a profitable trader and you're comfortable, because you got to understand here, these higher time frame points of interest to these higher time frame targets, this one on EU, from the time it came up there, you're talking about it's running 4 weeks now. Have you ever held a trade for a month? You got to do things that are not against your subconscious, right? Most people are not in states where they can hold trades for multiple days, let alone multiple weeks, let alone multiple months. When I want to know one of the biggest things, and Kyle, are you still here? Kyle Berg. Is Jordan, you here? Either of you guys still here? I'm hoping they're still here because so I'm not blowing smoke up your ass. But when we started, the three of us started trading around the same exact time. I think we all joined our first trading company around the same time. But when we started doing higher time frame stuff and we were doing swing trading stuff, we're all working. We all had our first kid coming at the same time, right? And then we all ended up having our first kid within a couple weeks of each other. So we were all super busy. We were all busting our butt, learning how to trade. And we were all focusing on higher time frames and swing trading. And our biggest focus was just letting trades run, getting in entries and making sure our directional bias was on point, right? Higher time frame points of interest that we talked about today on EU and OddCAD, where we would look for the continuation to start and then look for those higher time frame targets at the bottom and be able to not interfere with them, get into trades like that and then not interfere. And then throughout the new weeks, when we have new opportunities, right, we would add on, or maybe look for short-term plays where we're still in alignment, we're still targeting stuff, but now, you know, we have a trade running for the bottom, and we might be looking for now like we're targeting like a previous week low or a previous day low or whatever it might be. We did a lot of twin trading, but the biggest thing that we focused on was being able to hold trades long-term with no interference and making sure we're getting our directional bias down. And we held some trades for months. We held trades for months at a time. Our biggest one was a silver trade. I think Jordan and I held it the longest. I think he held it longer than me. I think he held it for 4 months. I think I held it for just over 3.5. 3.5. Yeah, swaps and stuff like that. But if you're holding a trade for that long, I mean, you know, I single-handedly built my bankroll holding that trade, that silver trade. It was that and a long-term gold were single-handedly there are reasons why I was able to quit my job, being able to hold those trades. And the last thing that we were worrying about was fees or swaps because the profits were just racking up. But it was there was bigger things there than the money. The money was the byproduct. The money was great, but it was more importantly teaching us really to focus on our directional bias, our higher time frame alignment, and really not interfering with trades and being able to hold them if necessary. If we feel like we're at a point of interest on a higher time frame, that's going to be the start of a big continuation move, you're talking about exponential gains if you're able to actually hold it, right? And if you're not, that's fine too. You can close out at the end of the week. And then remember, look at the EU. That took 4 weeks to where it is now. There were plenty of opportunities. After it started turning the first week, it made a beautiful signature pattern, right? There's your re-entry. It took the weekly low. Then you had other opportunities and they all targeted the previous week low. I mean, you could have been in and out almost every other day or every week or whatever. Like or you can do a combination. Like that's what we focus on now. That's like our combination. If we can see good solid entries, like take the odd cat, for example, at that 2 hour, and that's our position that we're deciding, okay, that's the one that we're going to just hold. We're going to ride that to the bottom. And then, you know, you're going to be able to, you know, manage that and trail your stop loss fractally based on 4-hour daily structure or whatever. So you're going to still be locking in profit, but then every week loads up and you're just looking for setups in alignment with that. So you can get your intraday stuff. You can get into trades and be done in a day or in a morning or in a couple of days while you have that long-term one running in the background. But everybody's going to be different. You know, some people aren't at that stage, but like holding trades long-term, like that's very hard for a lot of people because you don't have your trader's mindset developed. So like, think of how much your trader's mindset would not be affected if you were confident, absolutely confident. If you knew or not knew, but if you had a very good inclination of where price was going well in advance, would that give you the confidence to get an entry and hold it for the next 4 weeks? Like look at the EU when I marked up. We were looking at that coming down to the bottom 5 weeks in advance. The AU, the same thing. Multiple people saying that it's going up, it's buying, it's buying. Even in the EFXU, lots of people said that's buying, that's buying. I said that's coming down. We had people saying it's a daily signature pattern, is coming down, right? It's getting the confidence. And then when you have that confidence with that directional bias, you can hold trades, no problem. You can hold trades, no problem. And that's one of the things that really made a huge impact on my results and Jordan's results and Kyle's results, is being able to do that early on. Get that directional bias down and then be able to hold trades, be able to have confidence in our higher time frame directional bias. Because if you get the higher time frame directional bias down, it's going to provide ample opportunity. Like both those examples, EU down to where it is from that reversal point, 4 weeks worth of price action. Odd CAD from that point to where it is now, what was it, 6 weeks? Let me look. Odd CAD from when it got there, 1, 2, 3, 4. Same thing as EU. 4 weeks of price action. Right? It makes trading easy. Be like, okay, you know, we got the reversal, we got the continuation. The week starts. Let's just look for shorts on Odd CAD, EU, GU, gold. Wait till we see our patterns. Oh, there's a signature pattern, short. Like write it down to the bottom. That's it. Get comfortable doing that, then work on your risk to reward, then work on your entries, then work on, you know, being profitable. You got to get the directional bias, higher time frame stuff down first. It's just absolutely necessary. It'll make everything so much easier. But if you can hold trades for that long, by all means, go ahead. To answer your question, but most people, you got to also be realistic with yourself. You know, and you got to ask, like when I used to see people mark up stuff that had like 800 pip target or 1,000 pip target, I would straight up ask them, how many times have you ever held a trade and smashed an 800 plus pip target? And for the answer for most people was none. It's a very hard thing to do. Right? So if it's something that's, you know, going to be difficult to do, you know, the thing that we did that got really good at it was, you know, and that's how we were able to do it with crypto too, and just get in something and not even think about it or look at it, is we would open up swing trade MT4 accounts. You know, you can open up a broker and you can have multiple accounts, like, you know, internal accounts within an account. So we would have like one account, and then you would have like different MT4 accounts for that one account. And then one would just be for long-term positions that you don't even look at. You just set alerts. That can help you too. But it's just getting the directional bias down. Get the directional bias down, then worry about holding trades. That will give you the confidence to hold trades. Get the directional bias down, and that's going to give you confidence in entering buys or sells and where price is going. And then it's all about higher time frame, long-term perspective first, and then finding the short-term perspective in alignment with the higher time frame, and wait till it's there. If it's there, then you pull the trigger. If it's not there, you just look at one of your other 4, 3, 5 pairs you're watching, you know, and just set alerts like Kyle does. Let me, I just want to measure one thing. Let's just say hypothetically, you took that EU off the 4-hour, off the big entry, off the open. Who here did over 20% this month? Who here did over 20% this month? Who here did 20% with one trade? Or who did 20%, but it involved being on the charts every single day and maybe actively trading every single day? Just to show you some perspective here, right? I just want to show you one thing. With that EU that we were talking about, where we had the first signature pattern, once price started to turn from that point of interest down to the target, right? It was a 17 pip stop loss. It was 167 pips, and it would have happened in 2.5 weeks. It would have required you to look at this trade over the weekend, because you had it closed on a Friday, making the expansion. So you would have come into a Monday looking for the pullback, and then you could have entered that trade, and that's all you entered and executed and held to the higher time frame target. And you would have walked away with 20% off of one trade, off 167 pips. Let alone if you took the 1 hour on it, or the 886. you would have walked away with a 40% gain off of one trade with maybe 10 minutes of analysis for the entire month. Just for some perspective there of how powerful it can be when you have confidence in your long-term targets. You being silly.
Mm-hmm.
Mm-hmm.
And do some more, Daddy.
You want to do some more?
Mm-hmm.
Are you taking a nap?
Mm-hmm.
Okay.
And I want to do some more really quick.
On the whiteboard?
Mm-hmm.
Okay, say bye, everyone.
Bye, everyone.
Say have a good day.
Have a great day. Bye,
Go ahead.
everyone.
So does anybody have any questions about anything that we talked about today? Because I know we're going on 90 minutes, but who here thinks that they could have held that trade? That first EU signature pattern, that 4-hour, 1-hour candle, depending on where you took it, it was a 4-hour setup, and held it down to the bottom equal lows there, the big target that we were talking about from August, which the first week of getting triggered, you would have had no drawdown. And then that ran for, you would have come into Friday, if you held it for the week, you would have been at 13-1. You would have been running over 13-1 coming into Friday. Then the following week, it kind of spiked down with, I think it was NFP or FOMC, and then kind of pulled back up and tested it. And then the continuation was through this week. And then not to mention like where it is now, it'd be running 33-1. Obviously, I'm not saying you would have, the main target was taken, but I've never held a trade for more than 6 days. Crying was selling from 18.44. Yeah, so 18.44, that is the area that we're talking about, the 1-hour, 4-hour candle. I held the trade for 18-1, but that was 2 days. Well, I mean, I'm just saying, like, in terms of like, you know, you find a 4-hour setup like that, or you find certain trades like that, you know, if when you have the directional bias down and you have that confidence to, really, feel secure about where you're getting in and where price is going to go, and then anticipate like, okay, if this is going to turn here and come to this, knowing that it took like 3 weeks to pull back, it's probably going to be 2-3 weeks to get down to this point. But if I do, I'm going to be, I'm going to get paid off. It's going to be, for example, that one there was like 20-1, 20.5-1. So you would have walked away with 41% minus spread, fees, and commission. But not to mention, you could have had something like that and then additional add-ons for all of the other opportunities. So, there's just, you can do a lot less on higher time frames, still get insane risk to reward for short pips. I mean, you're talking about 20-1 there off 178 pips from the 1 hour. You're talking about 10-1 or whatever it was. Maybe was it 10-1? Yeah, it was like 10-1 from the 4 hour on 165 pips. 165 pips, but it took 2.5 weeks. But like 10-1, like think of how many times, like think of what your chances are better at, right? Holding one trade in alignment with the higher time frame, targeting a higher time frame target that offers 10-1 for less than 200 pips, right? So if you hit this at 2%, you're walking away with 20%. Now think about how many times you're doing your intraday stuff or your lower time frame stuff or your indice thing or your gold thing and walking away negative with all those trades that you're taking. Wouldn't it be worth the risk to see if you could just take something, a handful of higher time frame, high quality trades and just hold them a little bit longer than getting so involved and interfere and, let your emotions run rampant and make bad emotional decisions where, you technically could have set this on gold walked away, just had some targets, check in on it on Fridays, you know, and had a very easy month of trading and walk away with, you know, huge double-digit gains. But most people want to watch and monitor and look for these trades and, you know, make a lot of decisions based on profit and shoot themselves in the foot when, you know, I'm up like 3-1 and I'm going to close it and the thing ends up running, and it could have been that final entry point for a long-term swing. And then all the other trades that they lost, they're still down on the month, and, you know, they want to get into more trades to make it back. And, you know, they end the month taking 15 trades down 5% when they could just take maybe 2-3 higher time frame swing positions, be at 40%, not interfering, just living their life while a couple of trades are running. It can be so much easier. Like my partner, Brooks, like that's what he does. That's what he does. And you can get really good risk to reward off these higher time frames. So I'm probably rambling at this point, but I'm just really trying to drive a couple major points home to you. Like, you know, you don't ever have to go on lower time frames. You can get really good risk to reward. You know, you can get really good opportunities, you know, just on these higher time frames, 4 hour, 1 hour. But you got to get your directional bias down, right? Find higher time frame manipulation candles, higher time frame targets, look for price to get up into those points of interest, and then you can anticipate it, you know, being a reversal point, and then look for those continuations down to those major lows, and then just look for the same exact patterns on like a 4 hour, 1 hour in alignment. Then you can get those entries and hold them down to the lows for the next couple of weeks and probably walk away with, you know, some nice double digits, taking a handful of trades. That is trading made easy right there. But most people want to complicate it. Most people don't find success because they get in their own way. That's most people. That just because trading is a very emotional game. It's something that preys on your emotion. They're hoping you make bad emotional decisions. Way less stress. Absolutely. I would so much rather just set pendings and not have to worry about a lot of the stuff. And I've been getting back into it. Like I go through phases sometimes. Like I'll get into lower time frame stuff, and then I'll just get absolutely sick of it, and I'll just be hitting higher time frame stuff. And yeah, I go through phases sometimes. But anyway, anybody have any questions about anything we talked about today? But you know, one thing I would kind of just say on that too, though, is don't worry, don't go into phases like that. Like, I mean, it's one thing, like, hit your big goals first. Hit your big goals. Like, I wouldn't be so back and forth if I wasn't already trading full time. Most people are going to be able to, like, we want to like see how easy it can be to make 6 figures a year. Like, just for some perspective here, and it wouldn't even involve you holding trades that long, like in and out of trades in like a week or less. You could, let's say right now, with the percentages that are being offered with FTMO at 80%, and you're trying to make at least $100,000 a year, that is 10%, roughly 10% that you would need to make in a month. That's averaging 2.5% a week on $100,000 account, walking away with 80%. That is 6 figures a year, 2.5% a week on average, 10%. It's roughly 10%. That's not compounding your account. That's making that money, cashing that out back to 100K. Like, that's without compounding, it'd be less. Compounding, it'd be way less. But just hypothetically, I'm just saying 100K account with what they're paying out at 80%, that's 10% a month. That's a 5-to-1 trade. That's finding a trade setup like that EU and closing it all in the same week and being done for the month, walking away with, you know, $8,000-9,000 on a 100K account. Like that. Think of that. Think of that. That's why you need to just be patient. You can find these higher time frame directional bias, find a nice 4-hour setup like either of the ones I talked about today. I mean, you could have hit that 10% goal with OddCAD this morning. It did over that. It did like 7-1. And literally just wait for that. And then you have a full month to bang out one solid 5-1. You know, if you lose one, you know, you obviously won't just, you know, that makes it sound a lot easier than it really is, but you're talking about an average of 2.5% a week. You could just have the cream of the crop, wait for high selection, wait for the stars to align, high quality setups, 4-hour signature patterns with higher time frame targets, and then you pounce. 10% a month on a $100,000 account offered by FTMO, which is $630 to qualify, getting 10% on that account without compounding. It's 6 figures a year profit in your pocket. That's enough to change your life. That's enough to take you out of a job for the rest of your life. Then that's sky the limit. So perspective. It's all perspective and knowing the numbers. But we're going to wrap it up. We've been going for over 90 minutes now, but this is all you got to work on. It's all you got to work on. It'll change your life. Getting that directional bias down. So any questions before we wrap it up today? Looks like everybody's good. I know there were some situations that like make things sound easy, but trading doesn't have to be hard. And I'm going to end it on this. Success doesn't need to take a long time. Success loves speed, and things don't, honestly, they don't have to take a long time. It doesn't have to take 2, 3 years, 4 years, 5 years to be a successful trader and making $100,000 minimum a year. It doesn't. But you can make trading a lot easier on yourself if you just follow all the things that we talked about today and make it easier, not getting in your own way, sticking with higher time frames, avoiding indices, don't day trade crypto, stay away from metals, be in alignment with the higher time frame, be very selective with your higher time frame setups. And it'll dramatically change your life. It's trading, it's hard work. It'll take dedication and focus and consistency and extreme discipline. But you can make the entire journey so much easier on yourself if you just follow those things. Most people are just going to make it harder for themselves and get in their own way 9 times out of 10. So I believe you and all of you, and this is capable for anybody. Anybody can do this. It's just you need to have an extreme set of rules that you follow no matter what, like your life depends on it. And then getting funding, no problem. Getting that 10% a month, no problem. Like I see dudes in those leaderboards on FTMO smashing, 40%, or more, and then that's great. But more important is the consistency. Yeah, one great month, that's awesome. But I would take 10, 20K a month consistently over 5 years versus just a big come up. And you got to just have that consistency on your mind. And there's certain things that we talked about today that's going to provide the long-term consistency. I'll take 10K a month every single month for the next 5 years versus a 150K come up for a month all day. So keep at it, stay consistent, work on your directional bias. Don't focus on entries. Don't focus on risk to reward. Just work on your entries, your setups, your higher time frame targets, your higher time frame structure, and just get that directional bias down. Work on that consistently. Then you can work on everything else and layer that stuff in. And the rest will be a wrap for you. So hope you guys all stay blessed, stay safe, and I will see you. What's today? Today's Thursday. Holy smoke. So EFX members, I'll see you guys tomorrow. Other than that, see you guys all next week. Take care, everyone.